The October jobs report was released just moments ago, and it shows unemployment ticking up slightly from 3.5% in September to 3.7% last month. Non-farm payrolls added 261,000 jobs in October compared to 263,000 the month before, accounting for that 0.2% increase in the nation's unemployment rate, which still remains at a 50-year low. So lots of jobs still out there, but the unemployment rate did go up a little bit. NewsNation business contributor Lydia Moynihan joins us now. Lydia, it's not bad news, which means good news. It's not really good news, which means bad news. Where would you put this jobs report?
I think we're all still digesting it. You know, my first read is this is a much hotter report than expected, but futures are flying higher on this news. But I just want to, for context, provide a quote that Jerome Powell, Federal Reserve Chair, had mentioned recently. He said the picture of the overheated labor market with demand exceeding supply is continuing, and I don't see that softening. So that's what he said. And this report seems to support that thesis. We expected around 200,000 jobs to be added. 260,000 were added. At the same time, we are seeing that unemployment tick up 3.7% from 3.5% last month. Wages, we thought maybe they would decrease marginally. They've actually increased. So there's a lot of mixed data in this report, and I think markets are just trying to digest what that means. But this is a very strong report, a lot of jobs being added. And so kind of mixed. I think we're all just trying to figure out how, you know,
Lydia, I think we're in that transition period, right?
Unemployment's higher, but we added more jobs than expected.
You have some up indicators, you have some down indicators. The Fed has said that raising interest rates will increase unemployment, thereby shrinking inflation. So this is their plan. The fact that it's gone up 0.2% with 5 consecutive raises in the interest rate of 75 basis points, I feel like they're not quite hitting their target, but they are moving in the right direction. Is that analysis? What do you think of that? Is that right in your book? Or,
I think that's fair. And look, I mean, as we said, Powell said he doesn't see a case for softening yet. He thinks that it's still sort of an overheated labor market. And frankly, it seems like that thesis stands after this report, that we're still adding a lot of jobs. So it doesn't seem like, from the Federal Reserve standpoint, we're going to necessarily shift anything in terms of that policy or take our foot off the gas in terms of hiking interest rates. So it seems like this is sort of an indication we're going to stay the course in terms of interest rates. And
the Fed meets again in December. I think we can expect another interest rate hike. That's Lydia Moynihan. Thank you for that information on the just-in jobs report.
Yeah, and interesting to see how it's going to be affected by the future of jobs with Twitter and Elon Musk's acquisition.
I know. Hey, you might see some increased unemployment next month, right?
You know what I'm saying? Because like half of the staff is being laid off, according to these reports. Well, here's another. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.